Hi everyone, today let's talk about the Fed prediction for the economy, then we'll get into the economic calendars, as well as Max Payne, then we'll take a quick look at the charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, and make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So moving over to the Fed prediction for the economy, looking at this graph, it's saying the biggest decline will be in Q3 of 24, and that we're not really going to see major declines really starting until Q4 of this year. And that should accelerate into Q3 of next year. And then we'll see the increase in strength of the economy looking out through Q4 of 26. This is based on the fact that the interest rates that the Fed have been increasing have a lagging effect on the economy, and that we haven't seen the major effects of them quite yet. And most economic models have turbulence through 2024 and early 2025 coming from Apollo's chief economist. And then they mentioned that this is just a model. Obviously, we don't know exactly what's going to happen, but based on what we know today, this is what some economists are predicting. Moving over to Jeffrey Epstein and JPMorgan Chase, the U.S. Virgin Islands are seeking $190 million from JPMorgan as a result of them helping Jeffrey Epstein do sex trafficking things. And they've already paid $290 million on a similar claim to Jeffrey Epstein survivors. This is pretty insane that this is kind of out in the open, and they're still paying it, and they've paid it before. So just so you know, this is out here. Not going to go too deep into it, but pretty gross. Moving over to the economic calendar, you can see Michigan consumer sentiment much higher than expectations. Inflation expectations actually stepped up, which was interesting. I expected that to be lower than the previous read, as well as expectations, but it stepped up, and consumer sentiment also stepped up. Moving over to earnings, United Health beat on the top and bottom line. Really, everyone beat on the top and bottom line except for BlackRock missed on the top just by a little. And State Street also missed on the top just by a little, but all the big players beat on the top and bottom line, and markets rallied at least a little bit on that news before pulling back a little bit in the afternoon. Moving over to Max Payne, you can see we finished way up, 448.92, much higher than I thought. Still finished below that 450 call, which was the highest call going into the day, but right at that level, a couple of puts showing up here late at 448, but all of those ended up out of the money. Tons of puts in the market still, 842,000, put call ratio 2.12, fairly useful, but not as useful as it will be next week. And we'll look at that in the Sunday video. Moving over to the charts, starting off with the SPY here on the hour and the 12-hour, you can see we ended up pulling back a little bit from yesterday's high. We made a higher high and then pulled back below the trend, looking at that 55 EMA on the hourly chart down at 446.89. Still watching this level here, 448.74. We're above that level. We're still at the top of this consolidation here, and I would expect a little bit more pullback in the Monday session. Momentum starting to step down on the 12-hour chart. RSI at that midpoint, you can maybe see a rally up, double top, and then a bigger pullback. That would be more bearish in my opinion. But right now it seems like we'll probably continue down a little bit more on Monday. Moving over to the NASDAQ, similar thesis. Wicked trend line, wicked horizontal resistance, and then broke down from that level. Basically unchanged, very slight decline on the day. Looking for a pullback down to 376.46. We'll see how that plays out, but this was a clear rejection at the end of the week. Moving over to the Russell and the Dow. Russell also breaking down from resistance. Still held 190.61, so not terrible. Certainly could just be retesting this 21 EMA and then getting a continuation higher. But again, like the SPY and the NASDAQ, it pulled back a little bit. Dow, on the other hand, rallied with the banks. Good banking earnings pushed it to new highs, took out those wicks just barely, and then basically held in that zone. Still looks bearish on the indicators, but price action is showing a little bit more bullishness here on the Dow. Moving over to Apple and Tesla. Apple basically went sideways, consolidating at this highly traded zone, looking to set up a lower high in my opinion. Certainly doesn't look as strong as it has before, especially coming off of this previous high. Tesla, on the other hand, still grinding on this trend line, still looking for a push up to that next resistance. But either way, it's still bullish, and we do have Tesla earnings next week, so one to keep an eye on going into next week's earnings. Moving over to Alphabet and NVDA. Alphabet pushed higher, hitting that resistance. 126.42, back in this previous consolidation, continues with that bullish run. NVIDIA, on the other hand, pulled back pretty dramatically. We got higher in the pre-market and then pulled back all the way to the 9 EMA as well as VWAP. So that was a move from around 480.84 all the way down to 455. So a pretty dramatic move on NVIDIA. Definitely interesting, clear rejections. And that's definitely something to watch going into next week. Moving over to staples and discretionary. Staples accelerating a little bit, closing back above 74. We've been saying it for a while, still consolidating in this zone, but it does look a little bit more bullish here today, looking at 74.75 at the 200 SMA on the 4-hour chart for a price target. Discretionary, still grinding at that upper resistance. Momentum fading, RSI pulling back a little bit, waiting for that pullback to trend support. Moving over to breadth, you can see both of them pulling back. 50-day engulfed the previous candle, pulling back. 200-day also pulling back to trend support at the 9 EMA. So this trend line to the upside still being respected. Certainly could find a little bit of support in here and then push higher going into a week or two from now, but definitely something to watch as we continue to grind within this rising wedge. Moving over to yields, 2-year found a little bit of legs here. 10-year also rallying a little bit. It's in this consolidation zone. I would expect it to continue to hold in that zone. Might be just a little bit of a pullback after the sell-off that we had over the last few days on both of these. But really, you want this to continue lower if we're going to see equities going higher. 2-year, this is a little bit concerning. 10-year, right in this zone as I would have expected. Moving over to the dollar on the 4-hour and the daily, not much to say. Got down to that trend all the way, tested it, found a little bit of support. Might be worth watching for a little bit of a bounce into Monday, which would cause equities to pull back in my opinion. Moving over to JNK and TLT, JNK pulled back, engulfed the previous candle back into this previous consolidation. Still above all the EMAs and SMAs and still trending up, but pulling back in the short term. Similarly, TLT pulling off of that highly traded level, didn't quite make it to 102.50. Momentum still bullish, so it could absolutely hit the 21 EMA as well as the 9 EMA and then find support and rally up. But right now we're seeing a little bit of a pullback from this previous move. Moving over to my accounts, IWM, I had that 192 put. I'll get assigned on that. Ended up losing about $10 there, but keeping that 46-cent credit. Also sold a 192 call for 57 cents. So my break even is now down at 191. We'll see how that plays out on Monday, but I'm into a covered call here now. Looking at the Qs, I have those 2 covered calls that I continue to roll out. I rolled up to 376 and 377. Probably not going to roll those up anymore. I kind of expect a little bit more of a pullback, and in fact, I actually sold a 380 and 381 call going into the Monday session to protect myself from a little bit more downside potential, and I sold those for about $2 net. Still have those 200 shares, so playing off of those. I also have one put here at 375 going into the Monday session. It's already in most of a profit, and I might actually look to take that off early in the Monday session, depending on what we see. Overall, not too bad. Made around $170. Let me know down in the comment section what you think of the Fed model. Are we going to see a decline in the economy going into Q3 and Q4 of next year, or will it come sooner than that, or will it not come at all? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.